Welcome, everybody. I'm Etan Butler, Chairman at Dalmore Group, and today I am joined with my good friend Shari Noonan, the CEO and founder at Rialto Markets, an award-winning broker-dealer focused on both primary issuance as well as secondary market trading through their ATS, as well as another very close friend of mine, Sara, Judd, the one and only Chief Operating Officer at North Capital, a revolutionary broker-dealer specializing in financial technology, secondary trading, escrow, and custody for private securities offerings, and my brother Tim Nertsen, Head of Partnerships and Ecosystem at Templum, a broker-dealer that provides infrastructure for investing and trading alternative assets. We're going to do something a little bit interesting today. Rather than kind of talk about the industry, where it's coming from and where we think it might be going, we're going to go right into kind of what issuers today are asking a lot of us. What's going on the front lines? And we're going to kind of go through the questions. We'll alternate. Feel free to cut me off anytime or cut each other off, but it's more, just kind of, to have this general type of approach towards the discussion. We'll start with Sara. Question: why is access to secondary trading of private securities important to issuers and investors?
Yeah, I would say secondary trading matters for issuers and investors for a number of reasons. But first, I would kind of go back and say, private securities are inherently illiquid, and the regulations, that have kind of made it that way date back to the 1930s. And so as we look at the changes in regulations over the last decade, the implementation of technology to this space, and then just the explosion of growth we've seen, investors are demanding solutions for potential paths to liquidity. So, from our perspective, any investor going into a primary issuance, they should go in with the expectation that it is illiquid. But for issuers, creating a path to liquidity for investors helps create better investor outcome and potentially, better demand. If you're choosing between one issuer and another, maybe in the collectible asset space, one that supports secondary trading might be more appealing than the other, assuming all other things equal. So, it's becoming a demand and really a requirement given the growth in the space.
Absolutely. And Shari, we hear a lot about blockchain, tokenization. I'm an issuer. Do I need to tokenize my securities if I want to make them available for secondary market trading?
Absolutely. Thanks for the question. So they don't have to be tokenized. You can have shares on a secondary trading, alternative trading system in analog fashion. Or you can have them tokenized, and there are certain reasons why you might want to have them tokenized. For example, if you have a certain stream that works best from an operational perspective or some sort of fractionalization, you may want to tokenize those securities, but you don't have to. And really, a lot of this works in the back end and is transparent to the issuer. So it's up to the issuer and what they're trying to accomplish.
Got it. And Tim, can I hold securities in my own wallet and trade them with someone else? Is it as easy as that?
Yeah, so the interesting thing with this business is there's just so much optionality, right? There's also some complexities, right? So the ability to go frictionless like you can in public equities from one exchange to another ATS, it's just not built yet, right? I would say we're probably at first inning here, right? So as this business begins to mature, the ability to go cross-platform is going to be developed by somebody, right? So in its current state, the ability to do it is there. It's not necessarily connected yet. So there's a few sort of tail cases where that's available, but as an industry, it's more siloed into that specific ATS.
Can I jump in?
Yeah.
Sure.
So I do want to mention something, just because you mentioned wallets, and given the events of this week, one thing that I want to make sure is clear to everyone is that these are different from pure digital assets. Yeah. These are not bearer assets. They are securities, and you will have a transfer agent or you'll have a custodian that is responsible, that's a regulated entity that's responsible for the beneficial ownership of these securities. So that's why we think it's really critical that, you know, digital securities are really a really nice way to go, take advantage of the blockchain-based technology, take advantage of the innovation, but have the comfort in the all of the regulatory framework that has, you know, spent decades being put together to protect the investors. So I just wanted to mention that when you said wallet.
Yeah, and so what benefit does blockchain play today, right? Like if you ultimately you need a transfer agent that's ultimately the guardian and the determiner of, you know, who owns what benefit is there a benefit now for blockchain technology?
So the use cases, we always work in use cases, and the use cases that we've seen that have resonated the most with the market have been the following. The first, if you're looking to raise capital and you're looking to raise it from thousands of investors and do it in a cost-effective way, it may make sense to have it digitized, and then on the back end, the transfer agent, the custodian, has an operationally less expensive method of communicating or corporate actions, any sort of dividend or anything like that, sending those out to those investors. The second use case that we've seen is actually from the institutional world, where an institution is looking to, from a fund perspective, either increase the breadth of their fund. So for example, they might have a high minimum, but they're looking to get that fund down to a lower minimum. And from an operational complexity standpoint, by digitizing that fund, you can now reduce the operational, again, overhead and be able to send that out. Same thing with fractionalization of real assets. So those are the use cases that we've seen and that we work with.
Interesting. And
I was going to just jump in and say, in going, why should we care or who should care? I think the answer is exactly what you're saying. What does this technology do? And from an investor standpoint, it shouldn't matter to you whether it's a digital security or whether it's book entry with a totally, you know, tech-enabled TA or ATS. You care about efficiency, and from an investor, it can indicate potentially a path for liquidity, because if an issuer is going through the cost of the process to digitize their securities, that's probably indicative that they might want to enable trading at either then or at a later date. But the example I always use is, you know, I like to kind of compare digital securities to what I would compare like Google Fiber. As a consumer, I don't really care if it's fiber in my ground or through my existing internet connection. I just care that I have the fastest internet connection. And similarly with blockchain to this space, it really is a mechanism to potentially create a common infrastructure for better scalability and efficiencies.
Yeah, well said. And on that note, Sara, if I'm interested in setting up secondary trading for my company's shareholders, is it possible to host the secondary trading exchange on my company's own website or app?
Yeah, I mean, the key here is that to enable trading, typically there's some exemptions, but for the purpose of this panel, you typically need to connect and be working with an ATS, an alternative trading system, which the three of us all operate. And from there's different options depending on who you work with and how you connect. So as an example, PPEX, North Capital's ATS, we're really API driven. And so a lot of our partners are able to develop what's called an OMS, an order management system, from their platform that connects to our ATS. So no, they're not building their own ATS, they're leveraging ours, but they're able to create rails and manage their own ecosystem without sending investors to another platform.
So the feel from an investor's perspective is they join an app, a community.
Yep.
They're then presented with a series of IPO'd at fractional shares in assets, and then right next to that, because the Reg A exemption allows for an immediate path to potential liquidity, you kind of complete that circuit in that way. Kind of right.
A fully proprietary experience is what you have the ability to create with our solution.
Yeah. Shari, could I list my securities on like an exchange or a platform that like might potentially enhance exposure to my shares and you know, beyond my own investor base? Is that a thing?
Absolutely. I think that's what we're at the very early days of creating, and I know many of us came from the electronic trading space for equities and built a lot of that infrastructure out. This seems to be, you know, really what we're doing is building out a lot of infrastructure in private markets to enable issuers to provide that monetization mechanism and really separate the exit ramp of the company with the exit ramp of the investor. And by doing that, if you're an issuer, you would place your security on one of the ATSs, and then that would become available to both in most cases, the cap table of your company, as well as others in that network. And it's really about building out that network and that viability. But again, these are investor markets, not trading markets. And I think that's really important that, you know, if IBM had a market cap of $50 million, it wouldn't trade very often either. So it's important to realize where we are in the cycle and what liquidity really means.
Yeah, wow. And Tim, where are you seeing the most activity today for secondary trading?
Yeah, so I think the easy answer is all of the unicorns, right? You know, the companies that probably should be public,
Yeah.
right? The reality is, for some of the lesser known issuers, the only people that are going to trade it for the most part are people that already have a bias to that business, right?
Mm-hmm.
So current investors that might be looking to add to their positions, or others who wish they could invest and they somehow find a way to do it, right? So you know, that profile is going to change, and I think that's what the three of us are really tasked with doing right now, is trying to balance that supply and demand, right? You need to build critical mass on both sides to get people interested in this business, right? You know, and it's not to say that people aren't currently interested. It's just early, right? So to get enough issuers on and enough investors on and kind of marry them in the same window, that's the trick here. So I don't think there is necessarily a specific industry that is the hot spot, right? You know, real estate might be, because people are fractionalizing anything and everything they can in that business.
Yeah.
But as a whole, you know, there's fintech, there's medtech, there's a slew of different profiles of companies out there that are available to trade, right? You know, upstairs, the Space Ventures group, you know, we were talking with them, and you know, what would be cooler than going on and buying, you know, SpaceX, right?
Yeah.
You know, or some of the other businesses like that have, you know, $100 billion valuations, right? So, you know, I think that to quickly answer the question is, I don't think there's one specific hole that is, you know, the shining star. Mm-hmm. But thematically through the business, it's changing, and it will get liquid.
Yep, I agree with that. And Sara, what are the biggest challenges you see today as to why most issuers are not, you know, either concerned about secondary, or certainly most of them are not yet listing on an ATS, right? I mean, Reg D and Reg CF, you have to wait a year before it's an option, and we're still at very early days. But even most Reg A's, like, you know, when you're doing like a one and done raise, I find that many of the founders aren't really thinking about it. Like, it's not important to them. It's not part of their model. They're thinking about maybe going public one day. They're thinking they have a few hundred or maybe a few thousand shareholders, and they're going to be in it for, you know, in it for the long run. So what are the biggest challenges you see as to why most issuers are not listing their securities on an ATS? Is it awareness? Is it cost? Is it like a lack of interest? Is it something else?
I think it's all of the above. I think one of the questions you have to kind of ask is, as an issuer, why do I want to allow or go through the expenses to support secondary trading? And that's really going to look different based on different companies' objective. Like a company that's raising capital and they're done, they may not have the same incentive as a company that's continually raising money. If you're a company that's continually raising money, you may be concerned that if I allow secondary trading, I'm going to cannibalize my own primary issuance efforts. So I think what you really have to kind of look at is, how do you reduce the cost and the barriers to be able to just enable secondary trading? And some of that is, you know, as an example, if you're working with a transfer agent that, you know, might have really I don't want to say outdated, but maybe, you know, secondary trading is not something they engage with regularly, and now you need to change TAs in order to enable it, that's a big cost. That's a really big hurdle. So one of the things that we're trying to do is make sure that we're working with our partners in creating kind of the infrastructure at the early onset in the process. Whether or not they want to allow secondary trading, totally up to them. But then if they choose to, it's a lower cost, lower burden, and hopefully results in better outcomes. Because really, at the end of the day, do you really want investors in your company that no longer want to be investors in your company? And we've seen companies that may not want to continually raise capital kind of address this hurdle through quarterly liquidity windows, where they allow trading one day a quarter. So there's a lot of different solutions, but the key is just to be having that on your mind and your roadmap, and kind of just thinking about making sure that you're setting yourself up to have options and optionality as you move forward.
Awesome.
And I just want to dovetail on one thing with that. So when you look at the motives behind the issuers, right, part of it is just the life cycle of what we're seeing, right? When I got into the business, the average company was going public in about 3 to 5 years, right? It's way beyond that now, probably 10 years beyond that, right?
Yeah.
So the issuers don't want to feel like they're holding their investors and their employees captive.
Yeah.
So right now, the 2 seats I've had in this business so far, there's just a lot of tire kicking, right? Issuers saying, how do I do this? One, is it legal? Is it really regulated? All of that, and I think there's an education, point right now where there's a thirst for them to really understand this, right? And there's going to be an inflection point, and it might be a few of those unicorns that really do start trading almost like public companies that will kick the others into gear. So, I think it's again, it's an interest of the issuers, but they still need to get there.
Yeah. Yeah. Shari, I got a portfolio in the Bronx. It's been in, I got 6, 7 buildings, I got a couple hundred units, and I'm hearing all the stuff about fractionalization, right? Potential liquidity. I could get out some of my shares. So I want to learn more about fractionalization, and I want to ultimately give a path to liquidity to my LPs and others. I like the idea of there being some type of an exchange for my assets. Where do I start? How do I do this?
Yeah, so first off, as with most things, you get a lawyer. So you need to make sure it's a security. And if it is a security and wrapped as such, then it's simply, working with an alternative trading system to make sure that it's properly, set up, properly structured, and that you can onboard your investor base and fractionalize it. But that's pretty much.
And if I started with the Reg D, let's say, and I raised from friends and families, right? And now I'm like 2 years after the fact, do I just like call you and or work with my attorney? Like, what do I have to do to actually, what are the steps I have to do to get this thing traded and have a bid and ask on my LP interests?
Yeah, absolutely. So the steps that you would take is you would, if it was outside the seasoning period, you would have your cap table connected in. The cap table, the individual investors would sign up on the alternative trading system. You would place the security on the alternative trading system, manage Blue Sky, should that be something that you need to manage, which are state-by-state regulations. There are services for that. And then after your cap table is set up and your security is placed on the alternative trading system, you can have that available for trading. Now, there are different trading modalities. And this is something that Sara alluded to with the quarterly option. We see different issuers want to do different things. Some that have a lot of retail investors will want a central limit order book type of functionality where it's just a lit order, bid and ask, and they're firm orders. You can hit one of those orders and the transaction will complete from there. Other issuers want to pool liquidity at certain points in time and do a call auction type model. So it really depends on what is in what the issuer feels is the best way to give their investors access to that liquidity.
I want all my friends who are over 18, accredited, not yet accredited, to be able to buy shares in my buildings. Could I set that up?
Absolutely. They would need to sign up to the alternative trading system, be onboarded, go through AML KYC.
So if I originally used a Reg D, I could then sign up with an ATS and then position it so that anyone over 18 could then buy shares in the assets?
Absolutely. If they have to go through AML KYC, they cannot be sanctioned, obviously, and that's pretty much it. It's not a super complicated process. Yeah,
yeah, right. That seems like something that makes a lot of sense.
It does.
Right.
I would add, just to put on the issuer's radar, is Blue Sky filings.
Yep.
So if you, like with the Reg D, you kind of have 2 paths. You can go Rule 4A 1.5, which is like difficult, and that's where it's like accredited to accredited. It can't really be like market it, you can't really put on your website or send out emails. But if you have a small group of investors, and we actually see this a lot, where some shareholders might want to get out, other shareholders may want larger positions, that might be a good option. Or there's Rule 144A, and using providers like Guard. I know CrowdCheck has a solution. That's just something that the ATS typically doesn't handle. They will point you in the right direction, but that can also influence who and how you want to enable secondary trading.
Tim, are you seeing a lot of tokenized securities offerings like Reg D, Reg A, issuers going through the tokenization process?
Yeah, I think it ties back to what we were saying before, right? There's a lot of tire kicking, right? People are trying to figure out what it means and if they need it and if it's required, right?
Yeah.
And Shari made a point earlier saying, it's an option, right? You can go ahead and create a token if you'd like, right? And I think, from my mindset, I wouldn't, maybe not never, but I wouldn't anytime soon make it an absolute requirement, right? So if an issuer calls and says, hey, I'm looking for liquidity, I'm looking to do a raise, yeah, we have tokenization as an option. But I don't think it would be in my best interest or their best interest to say, yeah, it needs to be a token, right? So there's an appetite out there, but I think it goes back to before where there's still this education, what is it and how does it apply to me? And again, I think it's really important that it's a regulated market and they need to understand that, right? And it really just brings some credibility to the market. Yeah. And it allows the divorce of crypto from blockchain, right? Yeah. And to me, that's really important. And I think that's what the issuers are trying to figure out. Is it truly, just a technology, or is it a token like a cryptocurrency?
Are there some ATSs that require me as an issuer to go through a tokenization process in order to be able to list securities on their ATS?
Yeah, I'm sure there are. And I think in years to come, there will be more, right? Where things get a little more difficult is one, there's a little bit of a cost to it, right? Yeah. So by requiring it, you might take yourself out of some business, right? But then there's also some complexities. We were talking about the custodian, the transfer agent, right? That plumbing all needs to be put together. So some are either requiring it or getting there, but I think in the future there'll be a lot more mainstream requirement for tokenization.
Sara, if I want to start a platform that IPOs fractionalized assets in moon rocks or dinosaur bones or real estate or collectibles, and I want to include secondary market trading in my model, right? Where do I start? How do I set this up?
Yeah, I mean, I think if this is part of your business plan in the next 2 to 5 years, it's good to start identifying the partners that are going to support that at the beginning. It really, what we see more often than not, and I'm not sure if this has been your experience, one of the biggest hurdles from our side to get trading started is just simply the number of intermediaries an issuer has to navigate to be able to get it going. So like I mentioned before with the transfer agent, if their broker who did the primary issuance doesn't, support secondary trading, if their counsel is not familiar with the blue sky filings and the ins and outs of that, then you're really having to create so many new relationships to add this functionality. So my recommendation would be, do your due diligence and make sure that you're asking these questions, even though they might not be as important right now for your primary issuance. Make sure that you're working with a group that's going to be able to support you through the entire life cycle of your business and of that particular security.
Yeah, and Shari, market making. You come from a pretty impressive institutional background, and are you seeing market making or institutional investments in secondary share activity on ATSs? Is that a thing yet? Is that going to be a thing?
So these are very early days, I'll say, and we do talk to, I won't call them market makers, I'll call them liquidity providers. However, you have to understand that comes at a cost. And so that's, something that I think is very early in its evolution. We are seeing more institutions interested in this space, but again, it's sort of the exception, not necessarily the rule. So we have a ways to go. We consider this the long game,
Yeah.
and so we're really setting up the infrastructure for the future. But so far, if you have a $25 million, $50 million offering, and you think you're going to come onto an ATS and have a two-sided really deep market, that's we
Not
won't
there
be
yet.
able to provide that
Yeah.
at least right now.
And Tim, what's the role of what are these digital wallets? What does that mean?
Mm-hmm.
And what's the role of a digital wallet for issuers who offer investors secondary trading?
Yeah, I would kind of strip it down to its simplest form, right? Really, all it is in effect an account, right? It's your ability to hold your shares, right? So if you think about the process when you go on and you create a Robinhood account or a Schwab account, ultimately your stock sits there, right? You go buy shares of Apple and it sits in your, in essence, wallet, right? So it's a different term, a slightly different piece of technology, but ultimately it's just how you hold your shares.
Yep. And Sara, what needs to be done to get real institutions focused on fractional shares of private securities? And so that one day you could hold these private securities in like a Charles Schwab account or like any other positions you might hold in that account. What's it going to take? Is it a matter of size? Is it a matter of DTC eligibility? Is it a matter of getting folks like Schwab interested in offering access to these alternatives to their client bases? What's the path look like? How do we get there?
Yeah. Well, I think what's really interesting is that as this space has grown, tripled in 5 years, it's one of the fastest growing areas in the financial markets, and it is mostly self-directed. So these are funds and these are individual investors managing their own money, potentially moving it away from advisors, and then investing and doing as they'd like. So really, we're missing the over 100 trillion advisor market in the growth and activity that we're seeing. But the thing is they're watching and they're starting to wonder, okay, how do we get involved in, and as the space continues to grow, it's building credibility as to this being a viable option for capital formation, for investors to have a small percentage of their portfolio, and I'm really a quite small percentage of their portfolio, and these are alternative assets. But I would say to actually be able to access that channel, one of the biggest issues is really custody. These are book entry securities. If you don't have a TA, it could be just the issuer's Excel spreadsheet on the founder's computer, and that doesn't work for some of the Advisors Act rules around custody and being able to report above the line and be able to keep that, AUM on your books. So finding solutions for custody through DTCC's AIP program, through custodial brokers, North Capital is one for alternative securities. I know Drive Wealth is also really active in this space, and I think that solution will kind of be paramount in conjunction with secondary trading.
Sara mentioned that they're starting to listen now, right? Schwab just recently put out a paper or published a report that noted about a third of Gen Z, X, and millennials have an appetite in trading alternatives and tokens in their Schwab account, right? I would bet you, I don't know the data from prior life, but I'd bet you 2-3 years ago it was near zero, right? So as that appetite from the investor standpoint changes, these platforms are going to have to figure out a way to integrate.
Shari, what's the role of a transfer agent for secondary, and does a transfer agent need to be integrated into the ATS in any way?
So we're integrated with a number of transfer agents, but there does need to be a method for confirming from the alternative trading system perspective for confirming that the subscriber that's looking to sell the security owns it, and that it's free and clear, and that it's freely tradable. So that's one intersect point, and there are different ways that connectivity can work. It can be a node on a blockchain, and there's connectivity there where you have access to view have permission to view that particular cap table, or it could be other methods. This doesn't always have to be blockchain-based functionality. There can be other APIs and connectivity points there, and then a communication or methodology for transmitting when one investor or subscriber has then sold their security so that can be moved to the other investor. So that's really what you're doing when you're interacting with the transfer agent.
Transfer agent. And Tim, what's the role of a custodian? And do you need one? And why?
Yeah, so it's interesting that you get there, and I think this goes back to earlier where there's a whole bunch of optionality, right? You can self-custodian, there's a whole bunch of different flavors, right? So the reality is the role of the custodian is just to make sure that those shares are held and they can be moved when they need to be moved, right?
Isn't that what a transfer agent does?
More or less, yeah, and there's some blurring of the lines there, right? Ultimately it boils down to just being safe, right, and making sure that things don't.
But do you get any other benefits by having a custodian? Are there brokerage statements? Are there other unique, elements that you could provide to, issuers, but through including a custodian rather than just having a ATA?
Yeah. So again, it depends, right? And I hate to keep doing that, and I feel like I'm, waffling here, but the reality is it depends, right? Each transfer agent provides something different, and so do custodians, right? So it depends on what you're asking of them and what you need from them. But as a whole, it's a service that goes back to I don't know what date this all started. It's not all that much different today.
And I also think it depends on the investor base. So for example, you're going to, I always think of it as a continuum from sort of a retail investor to, investing in a Reg A security or a CF, all the way through to an institution investing on behalf of their client. As you start to move along that continuum and there's a fiduciary element that comes into play, really that's when a qualified custodian starts to play a more active role because there might be tri-party custody agreements, there might be other reasons to get a custodian involved. That's what I've seen in my experience.
Yeah, and I was just going to add something that we've seen that was kind of to our surprise as far as our fastest growing kind of line of business around custody is issuers who are wanting to do capital raises with VCs or institutions who had done a Reg A Plus or Reg CF campaign, so they have potentially thousands of investors. So custody can also be a solution to kind of clean up your cap table. If it's held in street name, then it's really showing up, as an entry on the cap table versus 2,500, investors.
That's
which
right.
if you're, in looking to raise capital from VCs, I think unfortunately does kind of matter and make an impact.
All right, we have 4 minutes left. I have 2 more questions. Sara, is co-listing between multiple ATSs possible? We've seen it with Exodus, right? With T0 and Securitize. Is that a thing? Is it going to be?
I think it's going to be, and we actually see it a lot more on the pre-IPO side. Basically, any ATS that's trading pre-IPO shares, it's the same names, and they're all working with each other and talking, and it can be a more like manual and negotiated process. On the issuer side, the answer is yes, but there's probably a lot of work and integration and navigating different processes. So you really have to go in with kind of an objective. What are you trying to gain by having multiple ATS providers? I think as the space grows, there might be, and the ATSs have, kind of both sides of the market more strongly. There could be a reason for that, but candidly, we're not seeing a lot of that today.
Yeah, I think a lot of Reg NMS in the equities world, it used to be that there were these ECNs, which are the precursor to the ATSs, and in the beginning they were sort of all islands, and then there became more connectivity, and those ATS or those ECNs that sort of leaned into the connectivity really won, and then eventually there was a regulatory mandate that they had to be connected. Everyone in the market had to be connected. So I think certainly there may be a business need to do it, but go in with a clear use case because it does introduce complexity. And then as the market develops, I do think at a certain point there'll be a tipping point where the regulatory market structure will require it should that be needed.
And I think that's a good point. Looking at public equities going back into the 90s, New York Stock Exchange traded just about 100% of the volume for its listings, right? Today, that number is sub 20.
Yep.
right? So in public equities, you have, let's call it 35 ATSs, I don't know how many exchanges and how many different order types, right? So, this business needs a ton more liquidity before we're going to get into that type of model. But I think, as long as companies are staying private longer, there's an appetite for liquidity, and this business goes through this maturation, I think we're going to get there, right? And again, there are some complexities from a technical standpoint as far as custodian and wallets and everything else that's tying it all together, whether it's book entry versus digital and all that, right? So we need to get there, but I don't think it's happening tomorrow.
In 10 or 15 seconds, each of you, please respond to the following question. We'll start with you. What are you most excited about in the future for the ATS industry?
Yeah, I really think what the ATS does is it opens up that possibility for not just a monetization or an exit ramp, but really product development and product creation. And that's what I get excited about, are sort of these new products that are coming to market that allow retail investors to invest in alts. So that's what I get excited about.
I think it's opening an opportunity to change how we construct portfolios, kind of at the most traditional level. And so I'm pretty excited at the interest and the optimism I see around it, kind of getting embedded in more traditional channels.
Yeah, and I would cut to the chase, right? Volume's what's going to be exciting, right? We need more liquidity, and managing that supply and demand curve, I think is what's going to get us there, right? To Shari's point, as we evolve, there's going to be different order types, there's going to be different types of plugins and all that, but we need the volume to get there.
Awesome. Thank you guys so much. It was, I think this was an amazing panel. Let's get this out to all the issuers who have these same questions. I hope that was helpful. Shari, Sara, Tim, thank you guys so much. You were incredible. And Shabbat Shalom.
Thank you so much.
Thank you.